Ira Epstein of Linn Associates with your financial market wrap-up for Wednesday, June 12th, 2019. Just getting on to 445. These boards are going to clear as I'm talking, but I wanted you to see where the markets finished. You were up in the Russell, down in the other stock indices. The dollar took control of a number of currencies today. Was it a one-day event or more remains to be seen. Bonds and notes, well, the bond market finished the day unchanged, but you're looking at the other part of the curve. Yield fell a little bit in their yield. Remember, when futures go up, what goes on in the yield? It slips a little bit. Where you got really hit today were all the energy markets. We're going to wait and see how the weather forecasts are for natural gas, but so far I'm seeing cooler temperatures. I'm not seeing Chicago get into the 80s in the 10-day forecast. That's pretty unusual. That's how the board's clear. I'm like a magician, aren't I? You know, boom, right there at that time. All right, the weekly area chart of closes. I have the word here down thrust. It's wrong. I put the average on. You were in a down thrust when you looked at the market without the moving average on it. When you put the average on it, you're in an up thrust simply because you're over the 18-day average. The bias is up. What's the real thrust as I view it? The last leg of the market went down from 29.47 to 27.52. We've had a healthy bounce in the market. Can it go anywhere is the question. You can almost look at this market from this high to this low and now ask yourself, is this a bounce in a market that's in an overall downtrend? And I think that's something that I'll put on the chart maybe as early as tomorrow. A lot of traders are taking issue with the things I'm saying. As example, I was on Fox Business, if you watched today, and one of the traders was saying, well, you know, we're just off the all-time highs. The market's still bullish. But that wasn't the question I was asked. The question I was asked was about Duke University, where a lot of the professionals that they interviewed, the heads of corporations, 65% or more, were saying that they're pulling spending plans back because of uncertainty. I think the market is masking a certain amount of that. But what I did say is if there's no U.S.-Chinese trade war, I think the market takes off. I think you remove an element of uncertainty. We also know the Fed has the markets back if the market decides to break down and these trade wars don't go well. There's a 21% chance right now, at least at the close today, of a June rate cut, but there's a high percentage that are talking 70% or more that think the July cut. I'm in the neutral camp. I think the Fed does nothing in June. There's the camp I'm in. And I think we have to wait and see how the G20 meeting goes and if the two presidents, Xi and Trump, can get together and get negotiations back on track, whatever that means. The president said they won't get on track. The negotiators will go nowhere if China backtracks from what had been agreed to between December and the last time the trade talks broke down. When you look at the S&P, you can see that you had this monstrous decline in May. In June, we've come back probably 2/3 of that, and that's why I'm wondering, is this a stall point? If the market breaks down again, key numbers are going to be, in my opinion, the 18-day average of closes, 28.3150, let's call it, and the 100-day average at 28.2025, just in that general zone. The resistance in the market, right here where the market's at. It's the upper Bollinger Band. Did you hit it? You just missed it. You hit it back here and the market paid attention to it. The market also paid attention to the lower black lines right here, which are the Bollinger Band bottoms, for the support zone. They got away from the market here. And the reason is you had come out of this sideways action and decided to trend. So that was important. Are we trending right now? Well, the way that I define swing lines, no, you've got a lower and low, higher high. The swing line could turn up by just taking out today's high and closing on the day higher. That wouldn't be bad. That could give you this one, but then you're going to be looking at this as an important number the day after. So we'll see what this market wants to do. In terms of the slow stochastic oscillator, it is overbought. It is not converting itself from bullish to bearish or anything like that. It's just overbought, and it is not in the first phase of changing itself just yet to locking in a bull trend. In the NASDAQ, you are overbought. It is the same pattern. You had that terrible May month. You've had a heck of a bounce, but if you look at the high to the low, you probably at about a 68% retracement. I have not run the Fibonacci, but I wonder if you're there. Just looking at it mentally. I'm also looking how the 18-day average and the 100 have come together here. And now the question is, what does that mean? Do you see how it slid down to it? If it crosses under it, it's called a bearish crossover, but it's voided instantly because prices are over both averages. So it becomes noise in my vernacular. When I'm looking at the Dow Jones, I see 3 levels of key moving averages for support if the market decides to break back there. I'm overbought, the way that the oscillator is explaining it, and any readings over 70 are overbought without both numbers going sideways for several days over 80, where then you get the conversion. Don't have that. So I get this is also a big correction. Now, have we taken out the all-time high? No. Are we within striking distance? Of course we are. I'm the first to admit that part, but I'm also wondering if this just isn't the bounce off of that terrible May. In the Russell, same thing. You had that monstrous May decline. This market didn't even bounce as much in percentage terms as the other. 3 levels of serious resistance. The 100-day average, 1546, let's call it 25, or I'll round it down. 1555.75 in the, as you can see here, the 200-day average and the upper Bollinger Band. So resistance, a bounce, I don't know more than to say anything about it. And here too, I have a reading over 70, overbought. In the VIX, the market is just drifting against this 18-day average of closes. The short-term trend, as the swing line goes, is up. You have divergence because momentum is still pointing down and bias is down. Difficult market. In the T-bond market, as long as I keep this embedded reading down, unless the market goes back up and takes the most recent high out, I think that the odds favor price and the 18-day average making a run at each other. It's a contra-trend situation. I understand that, but that's how you normally correct this. Can this market on a rally here just start embedding again? Sure, but between Thursday, it would take until the close of business Monday to get it done. The odds still favor that you have run out of upside momentum in this market. I'm going to say the same thing about the 10-year. 2 days in a row where you've lost the embedded reading, it often leads to price and the 18-day average making a run at each other. So we get to TLT, and I've got the same situation. I'm still looking for price in the 18-day average to get to each other. The contra part of that is that you have the bias up. That's about it. Momentum is pointing down. The swing line is pointing down. The trend, while it's down, is countered by the bias. It's losing the embedded reading that brings that thought process to me. In the dollar index, the dollar has shown itself to have strength now between the 100-day average of closes, the screen line, and the lower Bollinger Band. If you take a look here, you first came down, challenged the Bollinger Band, got down to the 100-day average, turned back up over the Bollinger Band. You can see today you hit that the 100-day, and boom, an outside day up. So to break this momentum that's trying to turn up, you have to take out today's low. Voiding that, maybe the market works up towards that 18-day average, but I don't see anything bullish on the chart. I see reasons not to be bearish. There's a very big difference. In the eurocurrency, this just turn the mirror the other way or go to the other side. We're inverting it. 100-day average, upper Bollinger Band, it's the same thing. Outside day down, but just flip-flopping it. Now the question is, does momentum start turning down? We'll know on the open tonight. In the British pound, notice how the black line is falling to the market and coming up to the market. Those are the Bollinger Bands. And you notice that you're drifting against this 18-day average of closes, what I call that line in the sand. What it means is this market's looking for direction, which makes all the sense in the world. Now that Miss May is pretty much out of the picture and just a caretaker of the British government, everybody's looking to see who's next to be the Prime Minister. What's the policy going to be? Will this market get a lead to understand, are they going to be out or in on October 31st of the European Union? Very difficult situation there right now. In the Japanese yen, we still have a pattern of higher lows and higher highs, which is bullish. It is countered by this divergence. Momentum often leads price. And in this case, it's trying to lead the prices back down. You had a bounce today. In fact, you had a bounce in a number of safe havens today. You had the gold up. You had the Japanese yen up. You had, if you look at Bitcoin, it was up. So you're getting a little bit of divergence right here. Here's Bitcoin back into its uptrend. It did not get enough of a break to hit the lower Bollinger Band. I think we talked about that. The question was it going to be able to? Because it was starting to get oversold the other day. The reading here was 32. You didn't quite get into that territory, and now you're back into an uptrend. So as long as you don't take out this low here of 75.15, you have the pattern of higher lows, higher highs over the 18-day average. The bias is up. Momentum is neutral, trying to turn. We'll see if it can, and that could put into play the upper Bollinger Band. In the Brent versus WTI crude, neutrality would be this 18-day moving average of closes. For all purposes, you're back there. And the market is trying to figure out what to do next on the big price break. The EIA numbers were bearish today. They came out with a 2 million build. That is bearish. And you've got lower highs, lower lows. You have a market that is definitively oversold. Can it get to the lower Bollinger Band? I don't know. But here you are with a market that was up at $72 just weeks ago, 2 weeks ago. You're back down to $59.97. The question is now, what does OPEC do? Algeria floated today the idea of further production cuts. That's either or. You know, the Saudis need a certain amount of money in order to float their budget and not be digging into their reserves. I don't think $60 does it. They claim it's 70. But Russia wants more market share. They don't want to give the market share up to the U.S. And you can see our WTI crude has fallen back into the $51 range, could be getting towards that 50. I don't know that 50 is important. I was asked that today on BNN TV, and I don't know that it's an important number. You know, this market can go down to $40 if it wants. But right now, when I look at momentum, both numbers are under 20 today. Yesterday, you lost it. One of the numbers wasn't, but the day before it was, and the day before. Therefore, what that is when you lose the embedded reading, as you did on this day, it has to stay unembedded the next day. If it doesn't, it becomes what I call a bull trap, because you were going up, trying to lose that, possibly putting into play the price and the 18-day average coming together, and it completely lost it on this process, as you can see. Does it put into play the lower Bollinger Band under $50 is now what I'd have to ask. Lose that reading again, and then I get a bit more confident, then the market has lost downside momentum. Rebob gasoline, same thing. Yesterday you flirted with losing it, and the question was, does that start the move up? And you're at the seasonal time of the year where normally gasoline prices are going up. They're not doing that right now, and I can tell you, the wholesale, we dropped about 8 cents this week. We might drop another 5 to 8 cents next week, so going to be very interesting to see what happens. Natural gas, this is all about weather. This is not about anything else, but is the weather going to eventually get hot? If it doesn't, we keep building. Tomorrow they're looking for, I think, 110 billion cubic feet coming into the market. You normally get about a 90 million feet build. So we're getting bigger numbers. You're still in a downtrend. We've had a bear market rally. Does this in price bring back to the to the lower Bollinger Band? If you get over 243.10 and you get the red line in the Bollinger Band and the slow stochastic, my head's ahead of me, then maybe you get some short covering that carries you back to the 250 area. I think tonight and tomorrow is going to be very important what goes on in that gas. Want to remind you, our guide to technical indicators, volumes 1 and 2, they're yours. Now, there's several ways you can get this. You can go to our website, by the way. You can get the Futures Trading Kit, or you can just click this on to get it. These are all the different chapters that come in these. They're both about 23 pages long, full of pictures and explanation on technical indicators. I happen to think of everything I've read, this is the best I've seen in it, because number one, I like to keep things simple. I think the time you start writing books on these, you've lost your reader other than if they're one of these numbers junkies, which a lot of the kids are today, but you lose us. It's that simple. The way this is written, it's pretty easy to get a grasp of what the indicator is about. To get it, you can call us. You can go to our website, Guide to Technical Indicators, volumes 1 and 2. Have a good night. I'll see you tomorrow.